Hi, in this video, we're going to talk about a Medigap policy, also known as a Medicare supplement. So if you hear the terminology Medigap or Medicare supplemental insurance, just know it's the same policy. Now, Medigap is regulated by the federal government. Each plan is identified by a specific letter, A, B, D, G, K, L, M, and N. Now, what it means to be standardized, so whether you're comparing one of these plans with Blue Cross Blue Shield, United Healthcare, Aetna, Mutual of Omaha, just to name a few carriers, a Plan G is a Plan G. The only difference is what you're going to pay for that Plan G with that particular carrier. Now, some carriers are community rated, others are issue aged, others are attained age. We'll explain that in the next video. Now, in order to identify what carrier might be recommended for you specifically, there's three factors that we always take in consideration. Premium, of course. Two, customer service. Now, for some of you, you may value customer service more than others. Now, because we deal with larger numbers of people, whereas you're just one individual, our experience with carriers may have a higher weight just because we kind of have a more realistic idea as far as what one customer service with one carrier is different than another. Three, loss ratio. Loss ratio determines the financial strength and stability of that particular insurance carrier. For example, if one insurance carrier has a loss ratio of 60% versus a carrier that has an 80% loss ratio, that loss ratio determines how much they have to pay out in medical claims. So if a carrier is at a 60% loss ratio versus 80, that means that 60% of every dollar they take in revenue is covering their policyholder medical claims. The remaining portion is covering other business expenses. And then after you back that out, that's where you're left with profit. So do you think the carrier that has a 60% loss ratio versus 80% is financially more stable? The answer would be yes. Because the carrier that has an 80% loss ratio has less revenue or dollars or profit coming in. So that means that carrier is more likely to have a larger rate increase. So just something to consider.